When the market zigs, you want to zag. And really, after Labor Day, there should be a little bit of an uptick, and we should remain relatively strong in the Columbus metro for sales. Hey there, everybody. Jaysen Barlow with Sell for 1% Realtors, going solo today, joined by Rich Cercone of Equitable Mortgage, here to talk about the state of the market, mortgage rates, and what we're seeing. And Rich, I'll hand it over to you, man. What are you seeing on the lending side of things?
Well, I finally have a one-on-one situation where I'm not outnumbered. You Barlow guys usually outnumber me 3-1 here, so I got a little advantage here today. Well, rates are holding steady. We're not seeing large moves one way or the other. I did see some information in the last 24 hours or so where about a week and a half ago, the odds of a Fed rate cut in September were 100%, according to the market. It's now down to 80% because of the inflation number we had at the end of last week. We had a PPI number over 3%. So they're back to being concerned about inflation. And as everybody probably knows, the Fed has a dual mandate: keep employment steady and also keep inflation under control. So employment seems to be rather steady. They're not too concerned about that, although they are worried about AI and the possibility of jobs being replaced by AI as we move forward into the future. I don't know much about that kind of stuff. You probably know more than me. And then they're also concerned about inflation always, and inflation is still uncertain right now. We don't know what tariffs are really going to cause. That's one of the talking points. And just in general, prices seem to continue to go up. So, what it means in street level to the people out there is the 30-year fixed rate is about 6.5, 6.6. 6.3, 6.75, again, depending on exactly what your situation is. And one last thing before I let you talk is that tomorrow, the Fed president, Jerome Powell, is supposed to make an announcement. I think he's like in Jackson Hole, Wyoming right now, meeting with people. So there's going to be a statement made tomorrow by Powell, and that could move the markets one way or another once we hear that statement.
Yeah, it might sway the
Yeah,
80% odds one way or the other.
right.
Yeah, and I mean, a couple of weeks ago, for people that to give some context, we were up 6.75, somewhere in that ballpark. So, I
Yeah,
mean,
we were pushing 7 not that long ago.
yeah.
Correct.
Yeah.
Mm.
And,
Yeah,
and rates right now are the lowest point they've been all year long in 2025. And so
correct.
it'll be interesting to see what he says. I mean, tariffs have kind of been in the unknown, has been the driving factor all year long, why they haven't lowered rates yet. And so it's all very interesting to watch and to see how the markets start to price things. Because as Rich has talked about a couple times, the market is already pricing in the drops or the increases before they actually happen. And so they're looking for these different signals. What channeling my inner dad here, inner Dave Barlow, what do you think is going to happen next? I know that you don't have the crystal ball, but you
I
see them
think
coming down under 6.5 soon, or you think they're going to kind of buoy back up a little bit?
Well, I think it depends on what the Fed says, not so much what they do. Remember, they lowered rates last September. Rates went up
Yep.
because the market has to be not only convinced they've lowered rates, but they have to be convinced they're going to continue to keep rates low or maybe lower them even more. That is the challenge. Maybe they might just lower rates one time and telegraph that they're going to take a wait and see approach, and that would cause rates to maybe bob up just a little bit. If you ask me what I think is going to happen, I think we're going to hang out here in the mid sixes, maybe a little lower for the rest of the year. And I think probably, if everything works the way we think it might, probably sometime end of the year, maybe into next year, we could see something move into the fives. We could see a rate get into now. FHA rates are pushing towards 5% right now, but we're
Right.
talking about conventional rates, conventional lending rates. And the reason that you might not go with FHA is there's a lot of embedded costs in an FHA loan you don't have in conventional. So even though you have a better rate, you have more costs. And so it's not necessarily any better of a deal just on a conventional.
Yeah, I met with a buyer yesterday that she's working on getting pre-approved. and she was asking me, why is this payment so high? And it's like, well, is it FHA or conventional? And she was FHA. And so, well, you got PMI, you got all kinds of things kind of built in here. Any buyer that's watching this, it honestly is worth a call to Rich to have him run numbers and give you some different scenarios. I can't tell you how many people I meet that they come to me pre-approved FHA and then they can flip to conventional. And maybe I'm
Right.
way off base, Rich, but what I've always kind of been taught and told from different mortgage people is that the loan officers will make a little bit more money pushing you FHA. And it's not really in your best interest as the client to go FHA all the time. If you can qualify conventional, even though the rate's going to be a little bit higher, it's typically a better payment and a better deal for you.
Yeah, I would always, all things being equal, put somebody in a conventional loan. Now, I'm not saying that FHA is a horrible loan. They're 30-year
Right.
fixed rates.
It's a good
You know,
product.
it's just
Right.
there's just a little more cost involved. And if you are going to refinance in a year, possibly, then that extra cost is something you've got to account for as you don't make it up in time to refi and to get your money back that you've paid into the mortgage. So all things being equal, I always would put somebody in a conventional loan. Now, if somebody's got credit scores that are a little bit beat up, FHA becomes a better deal at that point
Right.
because conventional grades you on your credit score. So if you are 780 or better credit score, you're going to get the best conventional rate. 760, a little bit less, 740, 720. You start getting below a 740, 720 into the 600s, and the conventional rate can really start to deteriorate. And in that case, it's best to jump into an FHA loan.
And in this case, her credit, she said, was around 790, which is, way
Yeah.
better than my credit. So,
Almost never a reason to put a 790 person into an FHA loan. I can't think of one.
yeah, the only thing I thought was maybe I asked her, said, do you have a bunch of debt? Maybe your debt to income ratios are way off. And, no, my car's paid for. And it's like, okay, need to get a second opinion here. And,
Yeah,
it's something that we've also noticed. And again, not to be mean towards your colleagues, is that buyers and clients seem to trust lenders and loan officers way more than they trust me as what they perceive as just a sales guy. But I have a fiduciary duty to my clients to make sure you're getting the best deal. And I think that unfortunately, a lot of my colleagues have tarnished that reputation over the years. So it's something that I think we both battle is people's perception.
right,
It's like,
right.
as my grandpa Ron would say, I am trying to help you, damn it. And not always seen that way. And speaking of that, I mean, the update I have on the sellers is almost every seller I meet with has this perception that, well, things are selling in a couple of hours, a couple of days. I'll pull up the real-time reports, and right now in Columbus in the metro, the average days on market for active listings is 70 days. 50% of listings in the Columbus metro are reducing price. Those numbers were unheard of 2 years ago, 3 years ago, when rates were down in the
They
threes and
were,
the
yeah,
fours. It is not the market of 2018, 2019, 2020. Now, having said that, it's also not 2008, 2009. There's no cause to panic. Prices really haven't unwound unless you really overpaid in the last year or two and got just totally ripped off on your house. Everyone's still making money sitting on equity. So, I mean, the
right,
market's really not a bad market as far as sellers go. Just you gotta bake in and not panic a little bit of time, and
yeah,
knowing the numbers. Like when I go into a listing appointment, I'll pull up that zip code and whether it's a house or a condo, and we'll examine this and say, okay, homes in your price point are taking 28 days to sell. So while you want foot traffic and you want showings, if you're not sold in 10 days, don't freak out. Now if you have zero showings, that's a different discussion and we'll guide you through this. They don't really have all the data going back 2 decades to know that, yeah, this is how things used to be in 2010 or 2015. All these guys know is that I buy a house and I list it, it sells right away. I think the days of people doing extremely shoddy work on flips are over. I think that buyers are being very picky. If you're overpriced or your house is not in good shape and you're not priced to account for that shape, you're going to have some trouble. But for the most part, I'm still selling about a house a day right now. It feels like that things are still moving. Market, we're not seeing a crater in sales or a crater in prices.
Yeah. I think we're kind of the end of summer lull. School's just starting. And I think we have a lot of people that kind of took a break. And then you have people who are waiting for the rates to go down, as we've been talking about for months now. Those people, when rates get into the fives, are going to come out of the woodwork. And these houses are not going to sit anymore. And they are going to get bid up higher. So this is the time when you can jump in and buy a house and maybe make a fair offer and not have competition against you.
The buyers that I've taken on, we can swing with a big stick. We can come in and undercut price a little bit and negotiate. We can keep our inspections intact, our appraisal intact. Buyers have some power right now. So if you're looking to
Right.
buy, really not a bad time before everybody else jumps in. And then when rates do drop, like Rich is saying, then you make your refi move. I think right now is a pretty good time to strike as a buyer. When the market zigs, you want to zag. And really, after Labor Day, there should be a little bit of an uptick, and we should remain relatively strong in the Columbus metro for sales until we get into like deep October, early November, and then it will start to again lull off. But I think that's a good point, Rich. It's school time. People's attention is shifting to back to school, and it's going to stay there for about a week or two, and then the market should pick back up again. New
Hard
builds
to
are great right
believe.
now too.
Hard to believe it's school time and almost Buckeye football time too, right?
What's your score prediction for the game?
Oh my gosh, it's going to be a tough game. I've got a son-in-law from Texas, and he keeps beating my ear. But I just think being at home, I think the Bucks are going to pull it out. I think it's going to be a tight game. I'm going to call it 27-24.
I say Buckeyes by 100. If you like the content, thanks for watching, guys. Like and subscribe. You leave a comment below with any questions. Our information's here on the screen. If you have questions about loans, what is my rate fair? Am I getting ripped off here? Give Rich a call. Rich will be honest with you, and he can close deals in about 8 to 9 days. He's lightning quick. And if you're thinking about selling, buying anything real estate related, feel free to give me a call, give Jamie Barlow, Dave Barlow, give him a call to complain about me. We're sell for 1%. Rich is Equitable Mortgage. Thanks for watching, guys. Have a great weekend. Go Bucks.